Welcome back, guys. Brian Horton with BK Trading Academy, professional trader, owner, and educator. And we're going to be talking about the USDJPY, specifically for those who swing trade and position trade. Swing trading simply means that when you're in a trade for a couple of days to possibly a couple of weeks. Position trader is from a couple of weeks to maybe a couple of months. But I'm going to show you how I am going to get at least 600 pips with the USDJPY using fundamental analysis. And I'm going to show you exactly what I mean, coupled with technical analysis. So let's go ahead and dive into it. I'm going to even cover a little bit of intraday trade for those who love to intraday trade. So stick with me. All right, traders. So here we are with USDJPY. I am on the daily time frame. All right. So before we get into it, I'm going to tell you that I believe that the yen or the USDJPY has started a downtrend, and you can possibly write this out for a while. Now, there's nothing 100% guaranteed in trading, and you guys should know that if you've been trading for a little while. But I'm going to tell you why I believe we're in a downtrend and how I'm going to collect at least 600 pips. All right. So first, here is my peak here. Right here. When was this? Back in October 2022. If I bring my cursor down, you can see October 2022 where it finally reached its peak. Now, what happened? Let me show you. As I scroll out, the interest rates for the yen was so low that every other pair that coupled with it just continued to blow the yen out of the water, specifically the United States dollar versus the yen. So if I grab my measuring tool, okay, so back in March of 2020, when it dropped, of course, that was the pandemic level and it started to rise. But from March all the way to October of 2022, 4,900 pips, right? So if you were to buy and you kept it for a couple of years, you would have made some good money. So look at this huge rise. You've never seen anything like this for so long. You've never seen a rise for 2 years of almost 5,000 pips. And it's because the yen interest rates were so low that in compared to other currencies like the United States dollars, it had no place to go but up. Let me go here. I like to kind of visit this website every now and then, Trading Economics, just to kind of see what's going on with the interest rates with the countries here. And so we see the Japanese yen or the Japan interest rates are the lowest at negative 0.1. And everybody else continues to rank in. We see the United States dollar at 5%, previously at 4.75%. So when you couple the United States dollar with the yen, you're going to have a huge increase. Recently meaning around October or so, last year in 2022, the yen had increased their interest rates, and we can see it here. Back in October 2022, we can see that price started to fall and it started making lower lows and lower highs. And lower lows and lower highs are simply the ingredients of a downtrend. So it's safe to say that we are possibly at the beginning of a downtrend. So here's my peak. I'm connecting my lower high and I'm going to do something like this. Okay. Now, what should we do now? How can we get in to benefit? So I'm on the daily time frame. And I'm going to show you exactly what I like to do. So one, I like to look at the Japanese yen index, and that index is JPYX. Here it is right here. And so what I like to do also is see what happened at that last peak here. So this is the peak here that I'm referring to. And if I look at the bottom of my screen, May 2022, okay, that was the last peak. I'm going to draw a straight line here and it hasn't quite got there yet. And that's why I believe price will continue to rise to that point. Price is currently here and I believe it will get to that point here. So let's go back to USDJPY. We're going to identify May 2022 like we did in the index of the yen. And it's right here, May 2022. Price is currently right here. Okay, so why do I believe price will continue to come down? One, because I identified a downtrend. Two, I know that yen has increased a bit, so it needs to kind of recover. And in order to bring in buyers, you have to bring the price down to bring in buyers, right? Just like any other market. So as I go ahead and dissect this a little bit further, now I'm going to use my Fibonacci retracement tool. The Fib retracement tool helps to identify the pullbacks, how far pullbacks are going to happen before the continuation. And I'll show you exactly what I mean here, okay? So here's my peak here, right here. Here's the bottom right here. And here is the pullback. Now, how far is this pullback going to reach before it continues to the downside? So that's the point of the Fib retracement tool. All right, so I'm going to grab it right here, and I'm going to grab it from the peak to the bottom. And we can see that it's starting to wick off of the 0.38 zone. And typically this number right here is the sweet spot, even the 50% or the 0.5 area. So what I like to do is grab my rectangle tool and get in between the 0.5 to the 0.38. And I'm going to move it over and just kind of match it to see what happened in the past. Okay. So let me go ahead and zoom out to the weekly time frame and we'll dissect that and take a look at it. Okay, so I'm going to pull that rectangle all the way over here. You can see that it matches at the bottom. This was support back in August of 2022, right? So that's a key level. This was also support here in November 2022. This was resistance in December, and we see these wicks. So we know that price can go anywhere between this area here. Okay, so this right here between the 0.5 fib level and the 0.38 fib level, to me, is very significant, in which it will retrace anywhere between here. So currently price reached the 0.38% level, and it could continue to the downside from that point, or it can push up a bit. So what I like to do is take multiple entries. So those who've been following us for a while know about the fractional lot size method, and that's a risk management strategy. So what I mean by that is that we risk no more than 2% of our account for the trade, for any trade. Okay. So if I'm looking to make 600 pips, I want to make sure that I have the best risk management strategy in place. So for example, if I have, let's say, a $10,000 account, I want to risk no more than 2%. I'm going to take that 2% and break it up and put in multiple trades. So this is what I mean. Okay. I'm going to delete my fib tool to make it a little cleaner. So here is my area right here. This is the 3.8 zone. This is the 0.5 zone. So I'm going to put in an entry right here at the 3.8 zone. I'm going to put one in the middle. And I'm going to put maybe one more at the 0.5 zone. And I'm going to break up my lot size. I may put maybe 20 cents a lot here. I may put 50 cents a lot here, and maybe, 60 cents a lot here, or whatever that feels comfortable. Just as long as I'm risking no more than 2% of my account size. And we use a position size calculator to do that. We have plenty of videos about the position size calculator, or you can just Google position size calculator for Forex and you'll find that. All right. So now if price continues to the upside, get me in the order. And let's say it comes down, I'll be good to go. But let's say it comes back up, gets me in the second order. Now I have drawdown. I have two positions in drawdown. But if my bias is still down and it's respecting my downtrend and it comes down, now I will be in profit for my second order. I will be negative with my first, and it continues down. Now I'll be in profit for both. So this will be ideal for swing traders and position traders, and I'll show you exactly why I said that. So now what I would do, one is measure from, let's say, the middle down to my support. This is where I believe price is going to be at. This is about 670 pips. I may not stay in that long. I would say about 600 pips. I want to have at least a 1 to 2 risk to reward ratio. So I want to risk no more than 300 pips. So I'm going to grab my measuring tool from my second entry. I'm going to go up to about 300 pips or 330 pips, anywhere between there. So one, it'll be outside of my downtrend, right? And away from structure. So I believe price should not come up there. But if so, hey, I only risk 2% and I should be good to go. Okay. So I believe price can still continue to the upside. I'm going to zoom down to the daily now and take a better look. And I believe price can come up to this zone here or up here. And I'm going to give you some numbers here, right? And it may not even come back up. It's retested this zone and already tested the 0.38 zone. So I may go ahead and put a low lot size in, but you never want to rush it. Okay. So my first entry will be about 132.859. My second will be about 133.278. And then my third will be about 133.767. So my third entry or my second entry may not even hit, but I'll be fine if it even just hit my first one. And that's what fractional lot sizing is all about. You're not risking so much, but hey, your other entries have your back if it ever gets to that point. So that's how we'll do that. You'll put your lot size outside of the downtrend, away from structure, at least a 1 to 2 ratio. You can even do a 1 to 1 if you want, but 1 to 2 always seems to work for me. And then that's what I'm going to go ahead and do. All right. So my take profit will be anywhere between let's say 126.970. So anywhere around that area should be pretty good. I may even take profit prior to that because we can see that these wicks are within here. So it's completely up to you and how long you want to hold the trade. Now, this is how I kind of determine how long the trade could possibly be. I look in the past to see when last time where price is currently at, and I'll count the candles to see how many times or how many days passed. So I will look over here. So last time price was at this area, I count 1, 2, 3, 4, 5, 6 candles here. So about 6 days before it hit the support zone. Even if I started around here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So anywhere between a week to 2 weeks in which price can shoot down to this area here, give or take. And that's how I kind of come up with the number of how long I'm going to be in a trade. Really quick, in regards to intraday, I'm going to go down to the daily time frame. And I still want to wait to get in. I want to wait to my 0.38 level, which is around here, right? And if I scroll out, my 0.5 level is up here. So anywhere within this zone, I'll be okay getting in. Okay, you want to see a wick rejection and then you want to sell because we're in a downtrend. Okay, so it's just completely up to you. If you have any questions, guys, let me know in the comments. I'll be more than happy to answer it for you. Also, check out my last video about the yen rising. Now, I told you guys about a year or so ago in that video that the yen will continue to rise as far as the index. Now, in regards to the USDJPY, it's going to start dropping because whatever goes up must come down. I look forward to your comments. Go ahead and like and subscribe if you haven't already, and I will see you in the next video. Take care.